Welcome to Cortburg Speaks Retirement, an audio podcast about investing in the stock market, financial planning, money management, and retirement planning. Each Wednesday, we help investors at all stages of life learn how to potentially grow and preserve their money from first job through retirement. Now here's your host, Miguel Gonzalez.
Good morning and welcome to the Cortburg Speaks Retirement audio podcast. On this week's audio podcast, we will talk about making your own investment luck this St. Patrick's Day. As Samuel Goodwin once said, the harder I work, the luckier I get. But when it comes to investing, luck may play a huge role in outcomes, no matter how hard you work. Below, we discuss some ways that luck may impact your investing, as well as some steps you may wish to take to try to make your own good luck this St. Patrick's Day. The impact of luck on investment returns. One reason so many financial professionals advise against market timing for long-term investors involves the distribution of days with major gains and days with major losses. Historically, and particularly seen during the earliest days of the COVID-19 pandemic, some of the market's best days were followed by some of its worst, and vice versa. Trying to sell at the top and buy at the bottom may require a great deal of luck. You may need to trust that a day with a 2 or 3% loss may not be immediately followed by a day with a 2 or 3% gain. However, over the course of a long investing horizon, these single-digit gains and dips are not likely to have a major impact unless you make a habit of buying and selling during volatile periods. Also, focus on the process, not on prior results. How can you take advantage of good luck and avoid the impact of bad luck when choosing your investments? The answer may be complicated and may depend on your personal circumstances. However, by focusing on the investment process rather than chasing returns, by buying into funds that have recently had a good run, you may be more likely to pick a future winner. Having a solid process may increase your probability of investment success over time. With your financial professional, consider focusing on these 3 steps. Number 1, discuss your financial professional's analytical process. How does your financial professional choose funds? How does he or she know whether it is time to dump underperforming funds or stick around for a future rally? By having some insight into the process your financial professional uses to choose their investments, you may determine whether this approach fits your risk tolerance and your desired asset allocation. Number 2, ask whether this process is designed to manage or mitigate some of the behavioral biases that may send investments off course. Some of these biases include overconfidence, sunk cost fallacy, and anchoring of sources. Ensure that your financial professional is reading and absorbing information from a variety of solid sources. And number 3, once an investment or set of investments have been chosen, evaluate it with an eye towards its end user. Is this investment intended to provide high commissions that enrich the investment company more than the shareholders? Or does it provide an excess return that more than accounts for its fees? Compare the investments to their benchmarks to see how they have performed over the years. Sifting through which successes are attributable to luck and which to skill may be tricky, but by firming up your investment selection process, you may improve your own luck and increase your likelihood of success. Also, make sure to visit our website, www.cortburgretirement.com. Our site is filled with educational videos, ebooks, publications, and financial calculators designed to help you learn more about your finances. As you search our site, send us a note regarding any questions you may have about any particular investment concepts or products, and we will get back to you quickly with a thoughtful answer. This is Miguel Gonzalez, certified retirement counselor and managing partner with Cortburg Retirement Advisors, signing off for this week's educational podcast.
The opinions expressed and material provided are for general information and should not be considered a solicitation for the purchase or sale of any security. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Securities offered through LPL Financial. Member FINRA SIPC. Investment advice offered through Private Advisor Group, LLC. a registered investment advisor. Private Advisor Group LLC and Cortburg Retirement Advisors Inc. are separate entities from LPL Financial. Investing involves risk, including possible loss of principal.